Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 16th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Got a little bit of economic data today coming out here and across the pond for the most part. Great Britain, we got CPI came in at 2.7%, just a tick above the 2.6% that they were expecting. We also got the PPI output, came in line with expectations at 0.1%. Core CPI for Great Britain came in at 2.4%, just a couple ticks above the 2.2%, which was expected, so pretty much in line with expectations. And then the PPI output came in at 0.4% versus the expected 0.2%. Now remember, CPI is consumer price index, PPI is producer price index. So we're trying to look at what the producers are paying and if they are laying that off on the consumer or if they are able to lay that off on the consumer. And since both of those slightly upticked and not very much in a way, but they were pretty much lockstep together, it looks like the producer is able to pass on some of those higher costs to the consumer and still do all right. We also got flash GDP out of the European region in line with expectations at 0.5%. Here in the United States, we got building permits. Came in lower than expected at 1.23%, was expected to be building permits came in at 1.23 million permits pulled versus the expected 1.27 million permits. That being lower than expected is more reflective of what's going on than what we've seen in the past. So in the past, we've seen that number be a little bit higher, but when you see it pull back, that is something to be wary of. When we see them pulling a lot of permits, it's really not as robust a number because you can pull as many permits as you want and not necessarily build. But when you aren't pulling permits, that means you can't build. So we have to keep that in mind. And then we saw some of this show up in the housing sector with housing starts coming in at 1.17 million units started versus the expected 1.26 million units started. So almost 100,000 less houses started than what was expected. So, and then we had capacity utilization rate came in at 76.7%. That basically tells us how much these manufacturers, if they are going at 100%, that means they're running 24 hours a day, 7 days a week, and cranking it out. 76.7 is not terrible. So it's not a bad number at all. Then we got industrial production came in at 1.0%, or just 1%, was expected to be 0.4%. So that better than expected is a good thing. Then that's about it for the United States, and the rest of the world doesn't really matter. No, I'm just kidding. The rest of the world hasn't really come out with theirs. We get New Zealand, which isn't very big, but we also get Japanese machinery orders coming in later. On to the overall markets, which I don't really have up, so I'm going to have to pull them up as we go. I'm going to look at crude oil. Crude oil, as you can see here, is down just slightly, but right there at the value area. And as we look at this chart, we can see that the 50-day moving average is ever so closely edging towards the 200-day moving average. And when those cross over, that becomes more bearish going forward. So we are starting to see it kind of stall out here. We could easily see it want to relax here for a while, maybe trend sideways, kind of like what we've seen up here, maybe not so long of a duration, but we could see it take a breather here, waiting for more data to come out to see what the inventory numbers are. But as of right now, it's starting to look a little bit bearish as just technical analysis goes. And then we've got gold futures up on the day, little over $6. This again also looking to edge ever so closely with the 200-day crossing over and below the 50-day. Right now it is more bearish, although we are seeing higher highs and higher lows on this market. It's going to have to be seen if we can bust through these two lines in the sand, which are going to act as a lot of resistance, especially when they are lined up with the value area. That's going to be just a point of contention for this market to really get through. So that's going to be a real tough slog for gold futures to get above there, especially with the equities yesterday making historical highs on the day in both the E-mini S&P and the Nasdaq. First time we've seen both of those two come in line with one another. Then we've got the bonds slightly up on the day as we were seeing some pullback in the rest of the broader equities, albeit it's not a huge move, but bonds starting to move higher as we saw with gold. So more of a kind of a flight to quality, if you will. Then on to the, let's look at the Dow Jones. Dow Jones Industrial Average, as this is what I was talking about, just slightly down on the day, right there at the point of control, and still really stuck within this range between, we can call it 20,043 to about, let's call it 2159. So not a huge range there, but they are stuck in the mud, just like the equities in the E-mini S&Ps, I should say anyway. Because if we look at the Nasdaq just trudging higher, and today getting another all-time historical high with the Nasdaq up 18 points. And the tech sector across the board has been leading the way, seeing move higher in Microsoft looking like it could turn around. I looked at a couple of trades to put on with Microsoft, but long call spread just isn't giving me the 50% rule that I use for that one. So I kind of laid off on it. And then we can look at the E-mini S&Ps. They're slightly down in the day. We can call this unchanged for all intents and purposes. But again, E-mini S&Ps making a new all-time historical high. Let's make sure that happened within the day frame. I can't remember it's still 2404. So this is what I was talking about. That was going to be a target that needed to be met with the 2404, because remember, this happened in a Sunday overnight session. So I talked about this many times. They've got to print that in the day session in order to make that a valid high. It's just not going to be accepted. The intraday market is going to go up there, and it achieved that today. So that is a win for the overall equities there. So it looks like the overnight market kind of printed a quarter tick higher. Whether or not they kind of really discount that and need to go up there and print that, that's not as much as what we had seen with this 2404. So the overnight session still has the high now, even though it came in till today. The overnight guys trying to flex their muscle. And you can see that this happened probably really close to the open of the overall markets. As you can see, 2404. I clicked off the day session for the extended, and we got the 2404 and a half in the day session, and 2404 and a half. All right, so the day session has it. I don't know why that other one looked like it didn't. It happened within the day session. So they have printed that high that we had seen previously as the historical high. Now it's in the day session. Kind of makes it real in a sense. Then on to the overall markets that I kind of played around with. I tweeted this out yesterday with Home Depot. And Home Depot, I did it just as an earnings play. And I talked about this a couple of times with the retail sales number, I may have been actually talking about this on Twitter, but the retail sales number, it didn't look good on the brick and mortar, but if we looked at the home improvement sector of that retail sales number, home improvement had like an 8% gain. It was one of the better of all retail. So home improvement doing well. So I decided to go in there and just sell some puts, take advantage of that volatility crush in there and a little bit of directionality. I expected them to come out with better than expected earnings because of that retail sales number, and tweeted out last night that I was going into the May selling the 152.5 puts, and I originally sold those for 53 cents, bought them back this morning for 10 cents. If I would have waited a little bit longer, I could have gotten maybe a nickel better, but at the end of the day, I put that order in before the open and got hit on it right away. So Home Depot, was a nice trade there. And then a couple of other things that I've kind of covered was XRT was a trade I covered today. And with XRT, if you remember, this is the retail sector ETF. And this was when Macy's and all those retailers were coming out with worse than expected earnings. The retail sector probably not going to do too well. So in XRT, I sold the June 45 calls, and with XRT, I sold the June 45 calls, and originally I had sold those for 28 cents, bought them back for 7 cents this morning. The next trade that I did was one that I added on Disney. The Disney chart just not looking too great. Came down and has broken below. Hopefully will settle within the value area. Anytime we kind of break out of that value area, come back into the value area and settle there, it's going to want to kind of retrace back to the high volume node, or where the most time and volume has been spent. That's going to be a magnet now once we've gotten back in there. This 200-day moving average could act as support there, but at the end of the day, I wanted to be a little more cautious with this one. I kind of looked at several different scenarios with this put spread. Finally decided on going with the July futures, and I ended up buying the 115 puts and then sold the 100 puts to create that defined risk strategy, wanting it to come back down to 100, thinking it's going to want to approach this value area, point of control, but we could see a little bit of support here. If we get down to that point and start bouncing off of that, I could look to cover that. So it'll still probably be close to my max profit potential on that one. So that's what I'm looking for that. Paid $7.35 for that 115-100 put spread in Disney, ticker symbol DIS. And I'm also trying to get out of my USO. Right now, I ended up originally selling this, the 9.5 puts in June for about 25 cents. We came up here and didn't settle inside that value area. We broke in there, but I needed to settle in there to really get upward momentum going there. So I'm looking to cover those 9.5 puts right now. It's trading around 13-ish. I'm trying to get out for about 11 today. So looking to get out of that one. So if you guys are keeping an eye on that, keep your eyes peeled. All right. That's all I got for you guys today. Friday's webinar is going to be on synthetic short. So at the end of the day, when we're trying to do something with like Disney where we wanted to short that, I could have looked at doing a synthetic short in there. I just wanted to do a real quick play in that. So I set it up as a put spread, and I'm not exactly sure what direction it's going to go. It's at this point looking bearish, but I don't really want to short Disney for this little move that I think we're going to see happening. So I decided to go with the put spread. You could do it as a synthetic short, and I'll talk about that in Friday's webinar, how to build that up, save yourself some margin so you don't have to have all the borrowing costs and all the commissions that go along with doing a real short strategy. You also don't have to pay the dividend. So go to protraderstrategies.com, sign up for that so you can figure out how to actually short the market, take advantage of downside moves in some of these underlyings. All right? That's all I got for you today. If you can't take that, take it easy.